This is when I love buying stocks, and I want to offer up this as almost kind of a part two. I got some feedback, so before I forget, real quick, and first off, if you want the kind of full user experience as far as this little, we'll call it miniature two-part series is concerned, up on the screen, I'll put the thumbnail to the other video I did. So if you want, I'll put the link to that in the description box below, and you can go and get a little bit more context. But on that video, I got the following comment from Alex, so again, thank you, Alex. But he says, some candlestick charts would be helpful. And I thought, Alex, that's pretty good, because in the video, part one, we'll just call it, I just kind of talked in theory the entire time. And, I still got good positive feedback from it. But to Alex's point, it'd probably be good to maybe actually see some of this in action. So that's what I'm doing in this video. I'm going to set up a little context here on the blackboard, but then that's it for theory. I'm going to go and show you a live trade that I did that plays out this exact same situation. So at the core in that video, the previous one, you don't want to buy stocks when they look like this. So if you see a candlestick and the candlestick, is looking like this, this is not when you want to be buying, okay? This is what is known as chasing. And I get it. In hindsight, it's easy to say, well, you could have bought right there. You could have bought right there. Well, that's true, but that's hindsight, right? And I mean, I can also argue, well, you could buy right there. And then if it goes down, well, that's a very nasty situation. So that's the other video kind of in a nutshell. But when I love buying stocks is when they're not going up. And I get it. That sounds totally backwards. It sounds totally bizarre. But that's the fact of the matter. So what I want to do now is show you exactly what I mean, and also a little miniature lesson here. And I've done other videos on this on the channel. But the other time I love buying stocks is not during the first minute of the day. In fact, I'll put another link below to a video that I said, that I talked about just little quick things that you can do that really open up the world of context and make, you can make your life a little easier. And in that little tip, it was just, hey, you know what? Maybe just let the first minute play out. So as a subset, like I said, another time I love buying stocks is not during the first minute of the day, because you'll see here that things could have gotten really nasty for those people that just, the market opened and boom, they buy. But let's just go to the video, or let's go to my desktop here, and I'll show you this exact real life trading result. So watching 59.75 very closely. So jumpy. But what was the high of that candle? High was at 59.67. So yeah. So this is good. Pull back right now. Making some other alerts right now. Letting sellers out, letting profit takers out. And that's definitely why you want to wait for confirmation. Highest it went was 59.67, so never got up there. Good lesson here on why confirmation can be an important thing. Wow, quite the pullback. Still interested though in a potential turnaround here. Let's see, what's the high of that? 59.50. I'd like to see it. Now if it can form a little resistance there at 59.50, that could be an interesting. There we go. Just got that alerted. 57.50 now is an area that I would be interested in, especially if it can recover back up here from where it is right now. So watching very closely here. Again, it's got to show some sort of recovery back to the upside. Okay, it's making a move. In there at 57.42. Anticipating the break here a little bit for the reasons already discussed. There's the break. Let's see if we can get some more follow through here. So all out there, beautiful for a $294 trade in 2 minutes. And I am not a greedy savage. $294 in 2 minutes, I will take it. And just to offer up a little bit more context here, didn't have time to quite show me type it, excuse me. But you can see right there, NKL update, 57.50, new upside breakpoint. And as of right now, didn't quite play it right. Granted, I'm talking in hindsight. I'm not mad about it at all. Again, $294 in 2 minutes. I'm not complaining, but good to know that members could actually be doing even better than what I did on it, because this thing right now is banging on 58.35, 58.25. But overall, there we go. Very nice morning. A little bizarre, right? To see a price going down and down and down, and then all of a sudden, that's what's actually getting me interested. I mean, it's totally backwards. I get it. Wait, you're getting interested in a stock to buy when it's going down, and especially that rapidly. Absolutely. But I mean, you saw what happened. I was interested. I really started to watch it down around that area. And then when it went up from there, things worked out very nicely. But the key dynamic there is, at this point, the risk profile is so much different. If you are just buying something when it's ripping and roaring, then as far as your risk, I mean, you can always sit there and be like, well, I'm going to put a 10-cent stop loss, or I'm going to put a 20-cent stop loss. And I mean, that's fine. But from a logical perspective, you could be stopping out at like literally the worst possible time as far as the chart is concerned. For example, maybe there's some like beautiful moving average that's sitting right there, but because you're just arbitrarily throwing out 10 cents, then you get stopped out right at that level, and then it goes in your favor, and you're like, oh, I got stopped out right before the move. No, you got stopped out because you put your stop loss at like the worst possible location as far as the chart is concerned. So that is why you gotta, understand the charts, but that is why, even if you are buying up there and you do understand the charts, then technically speaking, there's just where are you supposed to put your stop loss at in that situation, other than, like I said, the arbitrary 10 cents or 20 cents, which just doesn't make any sense from the, because you're putting yourself at risk of many other areas. But by letting the price come down, as you saw, letting the risk profile shift much more so in my favor, I was then able to take that trade as it went in my favor, and then you saw it made very nice money. Now, to full disclosure's sake, and I wish, kind of embarrassing to show this, but on the screen here, we'll put up another image, and you can see that in all actuality, that thing went up to $59.85. So yes, I was happy with my entry point. But to think that, now this is totally hindsight trading, but to think I left quite a bit on the table, relatively embarrassing, but it is what it is. So when should you love buying stocks? When should you really start to get interested in potentially buying a stock? Not when they're ripping and roaring. You gotta wait for some sort of pullback. You gotta wait for some sort of change of risk profile, and that change in risk profile occurs when prices are actually going down. Once again, I get it. When you're a beginner, when you're just getting started, that seems totally counterintuitive. Why would I be interested in buying stocks when they're going down? It's because that risk profile is changing, and that's very important to us as day traders. It's all about risk management, risk control, and you got to keep that in mind before you ever even enter a trade, before you ever really get even interested in potentially buying a stock. So yeah, when I love buying stocks is when they're looking like this. When other people are panicking, when other people think it's the end of the world, yeah, that's usually a good time to put together and structure a day trading plan. If you found this video helpful, then a couple quick requests on my part. First off, hit that like button. Comments, questions, suggestions, leave those down below. If you've ever watched any of my past videos, then you do know that I read comments and will reply to them. And then finally, check out the channel as a whole, and hopefully decide to hit that subscribe button. I would love to have you. So get out there. Reconsider maybe when you're buying stocks, maybe that's a problem with your inconsistency. Are you getting way too excited and chasing the price and all that? Consider buying when things kind of cool down a little bit, and I think you'll notice quite a bit of changes in your results. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.